Hi, welcome to the Market View for Wednesday the 5th of November 2014. And starting off with the 5-minute chart, let's have a look at the pre-market session. You can see yesterday that it was very quiet, a very narrow trading range there, and then eventually the market ignited. At just after 2:30 we see the market moving higher, trading above the 17,350 and shooting towards the 17,400, stopping at the R1 resistance there, trading back through the 17,350. There was a buy signal which was unqualified, and then trading all the way back down and finding support at the 17,300. Unfortunately, no signal in this area apart from the fact that we'd closed back above the psychological level there, which again I keep talking about, very powerful. And we see the market then trading sideways. Notice the tapering off of the volume, first clue that the market was incredibly quiet during yesterday's session. The market shooting back up there to 17,350, and again just really low volume for the trading session. Mid-afternoon, early evening, you can see there we had a sell signal appear on the charts. The market traded down. Where did it stop? 17,350. You can see there the market tried once and then twice and failed to close below this. So there's a surefire indication there that this market didn't want to go down. We then see prices reversing with some new buying coming into the market and stopping this trade out for 20 plus points loss as the market traded back up, including the slippage and the spread there. So then we see the market struggling at the 17,400 level. We got some selling in the market, the market starting to move lower, but yet again this time the market finding support at the DP level. The daily pivot point is a crucial area. Once generally broken above, the market will try and stay above. So then again we see the market reversing and heading back towards the 17,400. And the reason for this is quite simple. The market doesn't know what to do. We've got to the all-time highs, made new all-time highs. We've been seeing a lot of volatility in the market, and the market's calming down, and it traded down to around a 36-point range yesterday, so a very quiet range for this market during this period here. You can see the grey shaded line here to here is 50 points, so we can see we're around 36 points from the high down to the low there, say 37 points. So the market's very quiet. It attempts then to move back to the upside there and fails to do so. We see the order filled. The market struggling with the R1 resistance now. The market coming down doesn't stop out the trade immediately, and you're going to have to get out before the close of trade as well at 9 o'clock. This is at 20.50 where the mouse pointer is now. That takes you back to break even on that one. So around 38, 39 points loss for yesterday. It's just one of those days. They come along. We get them at least once a month. It's just part of trading. And again, it's nothing we can do about it. The market decided to go into a very narrow trading range, very quiet. And that is the effect of a quiet market, which is why we prefer a bit more volatility in the market. What's even more annoying is that on the overnight market, no doubt a Japanese effect. If I just scale this chart a bit for you, and then just get rid of there we are. So if we just have a look now, you can see that the market sailed through on the overnight, made a new all-time high. You can see there 17,427 was the recent high that was achieved. You can see how sideways the market's been for the last 2 days, but on the overnight market it's decided to drive through the overnight. And like I say, without looking at any news, you know this is the Japanese Abe economics. The Japanese are printing money at the moment, and of course this is supporting the Dow on the upside. But of course the Dow or rather we're actually asleep when the Dow is receiving this news. So you can see a bigger move on the overnight than we had more or less yesterday for the day session. So let's have a quick look at the news, see what's out this afternoon. We've got 2:15, we've got Fed members speaking, and ISM non-manufacturing PMI is out at 3 p.m. Crude oil inventories, not a big deal. So 3 p.m. high impact news item, we've got ISM non-manufacturing is forecast to come out the same. So again, given the market's low volatility and narrow trading range of the last 2 days, I wouldn't be surprised if this has little impact on the market there. We've also got 1:15 ADP non-farm employment change as well. So again, keep your eye on that one. That will be quite volatile. And also, just as a tip as well, make sure that you reload the charts 10 minutes before the market opens, so you've got fresh and clean data, just in case there's been any bad ticks on the overnight market. They will have been corrected, and that way you'll have similar, or should have exactly the same signals and chart activity that you see in the market alert. Right, let's have a quick look at the implied volatility, down at 11.95. This is a surprise, really. I thought this would have actually moved lower. I want this to go back down towards the 10% area, so we can actually see another potential correction in this market, another move to the downside, and a return and a resumption of the volatility. Right, that's it from me this morning. I will see you in tomorrow's market alert. As ever, have a good day, and also thank you for your support, very much appreciated. I will see you tomorrow. Thanks for watching.